Well, hey there, everybody, and welcome to today's VIP Trade Room with Roger Scott and Matt Horton. My name is Raleigh White, and I'm coming to you live from Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering some pretty important topics, including the 10 biggest mistakes that traders make that jeopardizes their trading. Now, we covered that last Friday, but what we're going to do today is we're going to focus on how to avoid falling into these traps and why this may make you a more confident and consistent trader. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Now, for those of you that were with us during Roger's pre-market open comments this morning at 8 o'clock Eastern Time, you'll remember that he said, hey, today feels like it's going to be a typical Monday. And he expects the market to basically see a little bit of a sell-off from the highs that we saw on Friday. And certainly in the futures markets, we saw that across the board. We also, Roger noted that the Dow hit all-time highs on Friday, but interestingly enough, okay, not the SPY, which also indicated and supported the fact that there is that rotation away from the tech, the speculative tech sectors into more defensive blue chips, and we saw that today as well. The second thing that he said is, as far as the week is concerned, the second half of the week promises to be a little bit more interesting when we look at catalysts. If you look at the key tech earnings that are coming out and the major PCE report that's going to be coming out on Friday. Looking at gold, crude, bonds, and the US dollars, all were just basically moving very so-so, very flat within their range, and giving no reason to think that there was going to be impetus in the stock market. He did say that the China large caps continue to rise at 10-year highs and noted that Bitcoin was starting to dump below its range, having largely as a result of the fact that crude oil prices were ticking a little bit higher. When looking at the catalyst for today, and you know what we mean by catalyst, we're talking about things that we know before the market opens. Okay, so those are the things that are more than likely going to move the market. And so he said, hey, we've got a home sales report coming out at 10 o'clock, which is worth looking at. He said, if you look at crypto stocks, pay attention here because Bitcoin is moving lower and below its trade range. Actually, it's in technical sell-off mode. We note that chip stocks at Intel was up 1%. Furniture stocks were basically really taking a hit because with Wayfair, Williams Sonoma, and RH all down on the statement that Trump is going to be looking pretty hard on increasing tariffs on imported furniture. And then consumer staples. Dr. Pepper down 5% pre-market. And as he said with consumer staples, they tend to move as a cluster. And if you've got Dr. Pepper down and it's a major contributor there, expect to see more in the consumer staples area. So those were the catalysts coming in today. Now, as far as Roger's small cap watch list was concerned, there were two stocks that he had his eyes on, and I am going to go ahead and put this in the chat panel for everybody to see those. And once again, on those small cap stocks, we're talking about OSRH. He said, hey, that moves above the 100 moving average. Look at it at above $1.25. And then CAPS, CAPS, if it moves above the 200-day moving average, look to get in at $2.36. Now, remember this about small caps, folks. The key to Roger's selection is price action and volume. Small caps are not market dependent, so regardless of the fact that the overall market seems to be just kind of quiet, even depressed a little bit, moving sideways, small caps, they march to a different drummer. They're not driven by institutions, they're driven by retailer investors like ourselves. So when he sees significant pre-market volume, that's what keys off the opportunity there. And also this, remember folks, in looking at potentially trading these small caps, do not do it pre-market. Wait for the open of the normal trading hours and then pay attention to those levels. Now, Roger also gave his thoughts on the short and the long stocks that he currently has his eyes on. And let me go ahead and post those for you as well. You can see that here. You can see that here. And let me go back to my note here. So, with regards to the shorts, GGAL, BJ, TW, BBAR, QSR, and CAIT, the thing that Roger wanted to say is he almost felt reluctant putting those up there because he doesn't hold much stock in shorting the stock market at this point in time. And the reason that is if you look out at the 20-day or at the 90-day, there are very, very few stocks. As a matter of fact, only a handful of stocks in either category that are basically, at their lows. So, the market's really not selling off, okay, even though it's kind of sitting in this middle position. And so for that reason, he's saying, hey, I like to short stocks if there's overall market move short, but not when that's not happening. So obviously he says, look, there are technical indications indicating that these might be good shorts, but he's not very high on those. On the longs, on the other hand, once again, he shared with us WMG, BAC, LVS, Google, PFE, IGP, ADA, DraftKings, NEM, and FAST. And of all of those, I put a little asterisk next to FAST because Roger particularly liked FAST and said he was going to be keeping a sharp eye on that. So let's see here. So let me go back into the chat. Can you enable to allow oh, yes. Well, let me go ahead and do that. Let me do something real quick here. I'm going to reclaim the host and I'm going to come down here and all right, guys, thank you for telling me that. So if you go to the chat panel now, you should see that everyone is enabled. And you know the rules. When we open this up like now, we expect everybody to act like gentlemen and ladies. This is a supportive community. Let's stay away from politics. Let's not be mean or aggressive. Let's be supportive and just share your ideas and questions about what's going on in the market. And we'll make sure that that's where we have our focus. So once again, as we get ready for the opening of today's VIP trade room, really interesting agenda for today. On Friday, Roger shared a listing of the 10 biggest mistakes that traders make that jeopardizes their trading. And so he listed that and he said, and guys, guess what? On Monday, I'm going to come back and focus on specifically how to avoid falling into those traps and why avoiding those traps may make you a more confident and consistent trader. And I think everybody gave a huge thumbs up to Roger, focusing his energy today on those topics. So the only guideline I have is this. If you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And with that, hey there, Roger. Happy midday to you. How are you doing?
I'm doing great. How are you doing today?
I am doing super. And you know what? Thank you so much for sharing the pictures of your birthday celebration this weekend. You and your wife look so great. And
Thank
it
you.
looks like you were having a wonderful time. And I know with the ladies, I think my wife is perpetually, what is she? She's 39 and holding. And
Exactly.
I am perfectly okay with that. But anyway, that was wonderful. And Raj, you said this morning feels like a typical Monday, for all the reasons. And you said the only thing probably worth paying attention to would be the 10 o'clock home sales. Prior to that, not even worth going in the market. So from your perspective, Roger, here we are midday. Any surprises? Any thoughts at this point in time, or are things acting out according to plan?
Absolutely no surprises at all. No surprises whatsoever. No, so far so good. I was expecting it to be quiet, but it's actually even more quiet than I expected it to be.
Right, right.
Like it's
That's what
even
I see
quieter than
too. Yeah.
there's no I mean, here, let me just show you this. Look at this. And you can, okay, so this is actually a great example. The best examples are the ones that you don't plan ahead of time, okay? Well, Oh, let me turn myself off there. Hey, Richard, Kevin, K. Lopez, Devin, C. Fazio, Jason, Raj, James, Genevieve, hello there. And I'll say hello to everybody here in just a second, but this is a great example. So look at this, look at this price action right here, okay? This is extreme. This is obviously Friday's price action, right? And this is after the first, let's see here. Let's see. This is the announcement. 10 minutes, 15, 20. I think I counted, I think 21 minutes is what I counted. That's the entire rally that took place on Friday. The rest of it was just chop. But notice the size of the candles.
Yeah, I know.
Notice they're not wicky. Now, notice today's price action. Now, this has, think about, okay, how much energy does this have? On a scale of 1 to 10, that's a 20, right? That's an explosion right here. This is meaningless. See how they're inside of each other? How they just overlap each other? This is called sheepish price action. There's no energy. There's no, there's a little rotation, and there's absolutely zero rhythm to this market. Friday, we had a pretty good rhythm, but today we have no rhythm to this market. So remember the three rules. I keep saying the same thing, folks. Energy, right? Energy, rotation, and rhythm. And those three things really do a great job of describing price action. Something you need to be intraday price action. And that's something you need to we don't have any of that today. We have hardly any of it. And if you don't believe me, just look at the rhythm we had here. Look at the energy we had here. Okay? I mean, look at this rotation. That's a rotation right there. Where's the beef? You know, there's nothing here. There's nothing here. So, and while we're seeing that right now, look at the divergence between the Vold and the SPY, and the Vold. The Vold just made a new low, which means technically it's now trending again. Because if it makes a new, if any asset goes outside of the range, you have a trend. That means it's breaking up or down. That's called a breakout. That's a breakdown right there. Look, this is about as good of a divergence as you're going to get. So, and look at tick today. Can't get above 270.
Yeah.
Can't get below 491. No 900s, no 750s here. And this thing, ADD, it's asleep. It's just, it's going down. It's not going up.
Mm-hmm.
And it's going down, but it's not really, it's not at 1,200 or 1,400. It's 786, which isn't really much. So we have a slightly neutral to bearish market, but the SPY is going up. Well, let's see what happens in the next 20 minutes or half an hour.
Exactly.
Because volume is coming down right now. I mean, volume is moving into stocks that are declining, and more stocks are declining now. I mean, this is horrible price action, but more stocks are declining now than they were, say right here, where there was only 365. We now have 754. So market breadth is not bullish, and volume is moving to declining issues. So I would be very, very cautious now. But that's not what we're here today. But I did want to talk about that. Let's do one more thing before we begin, and let me give you my watch list. I know a lot of folks like my watch list, so I want to give you my watch list. Now, what I do like about today, Raleigh, since we're already here and we're already on the topic, what I really like is this. There's a lot of positives here. There's another negative. Volume. Volume is very, very low, like really, really low. But one of the positives here is we're holding up. This is a big move we had on Friday. Mm-hmm. A big move on the SPY right here, right? You guys could see, yes, you could see my chart. And right here, we're holding up really well, like upper 25th percentile.
Mm-hmm.
That's very, very good. What you don't want to see is you don't want to see it break below 50, 60 percentile.
Yeah.
That's a big red flag.
You were concerned that could happen.
Yeah.
Today. You wouldn't have been surprised if that happened. Let me put it that way.
Yeah, I'm still open to it happening. I'm still open to it happening. I'm not.
So far, it's holding its head up. Yep.
But so far, so that's what you mentioned what I'm surprised about. I'm surprised that we're holding up so well in light of the market internals, in light of the earnings this week, and just in light of everything. I'm a little surprised. But this is a good surprise. It's a good surprise. One of the biggest red flags, folks, is when the market By the way, this is the first time I'm doing the broadcast for 10 minutes that I have not opened up the chat, Raleigh. Your my addiction is waning.
Well, all I can tell you is this, is everybody is delighted to be here. They're happy to see you, and everybody is basically agreeing with what you're seeing. No
Oh,
problems
all
there.
right. Good, good. You let me know if something comes up. I don't mean to ignore anybody at all. I'm just trying to really stay in the zone. So, which is why your guys are here. So, this is very positive. If it stays, the longer it stays this way, the more, don't think the longer it stays this way, the higher the odds of it coming down. No, the higher it stays this way, the higher the odds that the bulls will become emboldened again and try to run it up some more. So, the only downside is market internals are coming down, and so I wouldn't be surprised at all if we came down to the 8-day EMA, and ultimately over the next, say, 3-4 days. I haven't really even thought about it that far, but I wouldn't be surprised for 1 second if we came down to the 8-day EMA, which is right here, this lovely yellow line right here.
Right.
Currently, it's at 641. Okay. So remember, we're
So,
still in
quick,
August.
quick question from
Oh,
my
yes,
perspective, Rod.
yes,
So,
yes.
with the Volt being where it is, obviously moving lower, it
Hmm.
almost feels to me like you expect that the SPY is going to follow. It's basically disengaged from the Volt unless we're just in that no man's land.
But you got to also take this into account that in light of that, which, and I'm not taking that away from you, you're 100% correct. But in light of that, consider the overall market. What is the market's like this today? So if the
Yeah.
market was awake and if there was a lot of volume, I would put a lot more, a lot more. Remember, this is driven by energy. There
Yes.
ain't
Right.
none. So what I don't want to what we don't want to do is read too much into randomness.
Hmm.
That's kind of
Excellent
what
point.
I agree with you, and I am looking at it, but it's just we don't. It works really well when the volt is just kind of moving one way. It's been doing this. Here, I'll show you. You can kind of
Yeah.
see what I'm
I
talking
think
about.
the key word is this, is there's no energy in the
There's no
markets.
energy. There's no energy. Like,
Yeah.
remember what I said? Markets are much more forgiving when there's rotation, energy, and what did I say? Rhythm.
Rhythm.
And
Yep.
and with that, when you don't have a lot of that, when you don't have a lot of that, you're gonna have a lot of randomness, and it's Monday and volume is low. So I wouldn't put as much faith into this as I usually would,
Good
just
point.
as a result of that. But I am reading it, and I am being very, very mindful of it, and I'm still not going to go against the Volt. And that's one of the reasons why I think we're going to go to the 50-day moving average. I just don't know if it's going to happen today or tomorrow or tonight, but I think unless we see a hard breakout here, which I would be very skeptical about, I think we're going to come down here.
Yeah.
That's kind of where I'm at right now. And then we're not talking about earth-shattering moves here or anything like that, but I wouldn't be in a big rush to buy your favorite stock right now. I don't think you're going to miss out by holding till this afternoon, maybe. I'd like to see a little more downside. That's all I'm saying.
That's an excellent point, Roger. Your point is just to keep things in perspective. Don't look at things
Yeah,
out of
yeah,
context. Take everything together. Appreciate that. No energy.
yeah, yeah. August, no energy. Things happen a lot more. There's a lot more that kind of. It's like for you know what it's like. It's like a drummer playing a little bit behind the band. A little bit like kind of a
As a
little.
drummer, I know what you're talking about.
I know that's why I've said that.
Laying back on the beat a little
Laying
bit.
back on the time, right. So
Yeah.
it's just kind of like everything's a little just a little in a nice way, it's just a little off.
Mhm.
All right, so folks, I want to talk to you about this, and I'm going to be very, very honest with you. Okay, now a lot of times you guys want to hear strategies, you want to hear your favorite stock picks because you're thinking about making money, making money, making money. After all, remember what I always say, and this is the biggest oxymoron of being of trading. You come in, it's like you look back and you ask yourself, hey, why did I start this? And then 5, 10 years, 15, 20 years later, you still enjoy it, but you're enjoying it for different reasons or maybe other reasons than just making money, which is really interesting about trading. I think if it was just money, I wouldn't be nearly as interested in it personally. But but that's like my thing, so I'm biased. Um, Yeah. So, folks, what you're seeing here is a chain. It's literally a chain. And a chain is only as strong as its biggest as its weakest link. You can be the best market timer in the world. And I really sincerely mean that. You can have your exits honed, you can have the best technical indicators, you can have everything. But if you're missing one of these, you're done. You're cooked.
You're cooked.
Now, to a degree, to a degree, we all have our very, very, very strong points to a degree, and very, very, and some weak points. And nobody's perfect. Nobody's perfect at all. But we all have our upside and we all have our downsides. Okay. And you need to know, you need to be able to prioritize these for yourselves. And by the way, unfortunately, this is something that you need to work on yourself. This is not something that's objective. This is subjective to you. Everybody's got different. Some people are amazing seeing the big picture, but they can't help but have too many positions at the same time. Some people don't know what they're missing. They assume they know things that they don't. That's the biggest problem. So folks, I'm going to tell you, and as we go through this, if you assume that I got a note from Omar. Roger, I'm guilty of like 3 or 4 of these. I think Richard might have mentioned. I don't, but the guys who make the most money with me will tell you they got a lot of problems here. And the guys that are making no money will usually tell you, I'm pretty good at this. I'm just letting you know historically. I'm not picking out anyone. I'm not suggesting that at all. And I haven't even seen any emails like that. I'm just saying typically that's how it works. So we all have these to a less degree, greater degree. It's not shameful. It's just the way it works. It's because we're human. And the funny thing is, the more functional of a human you are, the worse you'll be at these things, which makes it even worse, which makes it even so frustrating to be a good trader. Because, just when you think you got the I'm a good human being thing right, it screws you up when it comes to trading. We just can't get it right. So, 1 second. I'm just looking at a stock right now. Yeah, definitely want to add that to our watch list. And I'll give you, before we leave today, I will give you stocks on my watch list. And I will try to teach you how to SPY is starting to curl a little bit. And let me just show you guys this while we're watching. The volt is coming down now. Now the volt is starting to trend. Tick is starting to come down. We're starting to see something here. But let's see what happens with the SPY in the next 15, 20 minutes if the volt continues coming down. All right. So the biggest mistake, the mistake that prevents you from growing. See, some mistakes only help you lose money, but some mistakes prevent you from growing, developing. And that's the first one. If I had $1 for every time I've met somebody who thinks they know what the folks that think they know everything, I've been trained by this guy, or I don't respond back to me, but I know better than you. Okay. All right. I am always learning. Matt is always learning. I'm always sending him videos. I asked him if he watched the video. Did I not over the weekend? And wasn't I told you that the first one made me fall asleep and the second one was great?
Yep.
I'm telling you, I spent 5 hours this weekend watching a video from another trader. Yeah, 5 hours. And I've been doing this for 31 years and I have a 94% win rate. So think about that for a minute, okay? You never, ever, ever, ever stop learning. Mm-hmm. If you think you know everything, you don't. Now, a lot of you know that you know that. You've realized that, or you've always realized that. That means you're pretty intelligent, okay? It means you're a smart person. So assume they know something that they don't is huge. It's huge. It's huge, 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 huge. That's one of the biggest things I want to unteach you from. The way to get away from that is sticking to first principles with basic principles. You know what that means? It means taking baby steps. It means not trying to fly a plane when you open up your account. It's to use a structured strategy. For example, the Alpha Zone Pro. It's got the lines, it's got the arrows, and it's got the oscillator. It's a structured strategy. That's a perfect example. If assuming you're day trading, right? Start with something that's structured. You know why I created it? I created it for folks who think they know what they don't know. I gave you the lines, I gave you the levels, I gave you the oscillator. It's all there. You don't have to look at anything except market internals, and I gave you that too. So instead of looking at a million things, all you have to do, for example, is look at this and look at this, and for the next 2 years or 3 years of your life, until you're making more money than you ever thought possible, you don't need anything else. You really don't. If you don't believe me, just ask Bugs, okay? All right. And by the way, my chat is closed. I am not looking at any comments at all, okay? Because I want to spend a lot of time with this, and I don't want to be distracted today. Okay, another one. And this one is a beginner's mistake. But unfortunately, it goes away. Number 2, trading individual positions instead of the program, that goes away after you've achieved positive expectancy. That problem will, if somebody sends me that email, I know right away their positions are lopsided to death, or they're just not achieving, they don't believe in positive expectancy. They don't understand that it can be achievable. When people understand positive expectancy can be achievable, and Raleigh, I'm not looking at the chat at all, so feel free to interrupt me anytime, okay?
No, once again, and I will, Roger, when I see something that needs to go in there. But once again, the chat is open to everyone. So we have people chatting with one another as you're speaking. And once again, everybody's agreeing. You know, Roger, what they're saying is even when I agree with what's on there, doing it in practice consistently still is elusive.
Yes, yes. So trading individual positions instead of a program, that means, hey, I had a loss on this trade, and isn't that how it works? I mean, like it's almost like saying your reaction is like you saw a ghost. Like, yeah, that's trading. That's called trading. Taking a loss is a big part of trading. As a matter of fact, I know traders who are in that stage 70% of the time. Some of the best traders in the world. I was actually looking at at this program over the weekend. It's a program where it's like a funding program. You know what they want your win rate to be, Matt?
What's that?
I'm not going to name them here. It's not appropriate. But over 20%.
That's it?
Yep, over 20%. They don't care what your win rate is. They care about how quick you cut those losers. They know if your win rate is 20%, you're cutting your losers really fast, like that. Yeah, they don't care. They don't care because they know that you can make you know if you're winning 22% of the time, but your trends are like this during the day, they need to catch one good move a week, basically. You understand? It's like trend following on the spy, but it doesn't matter as long as they have a positive profit factor and expectancy. And again, there's 80% win rate, there's 20% win rate. But what I'm saying is, you can't trade individual positions. Doesn't work that way. That's not how trading works. You have to trade the entire program. You have to think of the last 100 trades. How did I do in the last 100 trades? How did I do in the last 75 trades? Not the last 3 trades. You know how not all of you, excuse me, how some of you, I want to some of you, you start thinking, you start assuming you know everything, and then you have 3 losers, and then you start from, no, don't do that. Don't do that. Stay on the path. Stay on the path. As long as it's the right path and it has a proven ending, proven trading strategy, that stay on the path. Okay. This one, almost everybody, including I caught Richard doing this. I don't think he's doing it very much anymore. I know Omar was doing it up to about 2-3 days ago. Folks, now here's the problem with trading too many positions, and I want to explain to you mathematically. A lot of you when I explain things and I don't tell you that it's mathematically, you don't listen. But we have a lot of engineers in the room. Engineers like certainty, so I'm going to explain something to you mathematically, and then you can argue with math till the cows come home. Um, what happens when you have too many positions is, regardless of how good of a trader you are, you will eventually your alpha will start diminishing to a point where it's going to be matching the market. If you have too many positions, you're going to be mirroring the market. Okay? You're going to be mirroring the market. You don't want to mirror the market. You always want to be outperforming the market. There was a study done that said if you have over, I don't remember the exact number, it might have been over 7 positions. Something tells me it's around 7. You're pretty much correlated to the market. Now, there's an exception to that if you're going short. We're not counting shorts in that equation. Okay? So if you want to do 2 longs and you want to do 2 shorts, it's still counted as 2 positions, which is fine. 3 positions are fine. You could do 3 longs, 3 shorts. You could do that too, but not 6 positions in the same direction. Okay? Don't trade too many positions because you will be literally remember something. Relative strength, because you're thinking to yourself, and the folks who've been making a lot of money, this is where you open up your ears and listen to me. Yes, I'm talking to you right now. If you've been making a lot of money with my programs, this is the problem. The problem is relative strength doesn't go like this. It goes up and down, comes in and out, up and down, up and down. So you're thinking to yourself, hey, I'll just hold the 5 strongest stocks in the market, right? And they'll have a positive alpha. I'll just look, the market's not going anywhere, but these 7 stocks are, so I'll just hold these 7 stocks. Relative strength the 8-day EMA is gonna catch up to you. You understand what I'm saying? The flag is gonna appear, and then rotation will come into them again, because relative strength is not. Listen to what I'm saying right now. Open up your ears and listen. This is important information. Relative strength is not like this. It's like this. It has a lot of rhythm. You know why it has rhythm? Because institutions don't keep their finger on the buy button all the time. They buy, they let price to cool off. They buy again, they let price cool off. They buy again. They're looking at the market. They're not looking at the same thing you and I are, but the last thing they want to do is keep chasing over themselves. You understand? So they buy, they let a couple of days go through, and then they start buying and selling again. Programs. Okay. So when you do, eventually the market will just catch up to you if you have too many programs. Too many positions. Just don't do it. Most of the time, the reason you have too many positions on at the same time is because you're holding on to losing positions. Okay? Don't do that.
So, Roger, question
Yes.
that's come up in this area, and I think it's a good place for a pause.
Mhm.
It's like, but Roger, I've got all of your programs and
Yep.
I'm getting quality signals all the time. Now, I've got day trading programs, I've got short-term swing, I've got long-term swing. Does that still apply there, or is that an exception?
The day trading stuff, so Pit and like Alpha Zone Pro, Pit, those things, no, they have no correlation to anything.
Okay.
But programs, I'll tell you where you'll have correlation. You'll have correlation in well, I mean, you got to make sure you don't have correlation, but you'll have correlation in Alpha Zone Pro and maybe Stealth Surge. But that's two positions. I mean, we only have 1 at a time or 2 at a time, so that's not a big and Matt and I, remember, we keep a spreadsheet. So we try not to correlate ourselves the same way.
Oh,
We have a
excellent. Yeah.
spreadsheet where we have
Yeah.
we treat all the programs except the Pit and Trading Zone Live.
Okay.
That's not on the spreadsheet because they, to answer your question, because they have no correlation, because
They don't have a correlation.
don't have any
Okay.
correlation, but I put everything on there. So I know exactly what we have. And if I say, hey, Matt, I want you to put this stock on, he'll be like, we already have an energy stock, or we already have a utility stock. Nope, can't do it. So we're aware of that. We're painfully aware of that. we're not going to give you two chip stocks and two programs. You know what I'm
And two
saying? We're not.
programs. That's
No, we're not going to
excellent
do that
because
unless it's the pit.
unless it's the pit. And so
Yeah, yeah,
and I think that's a great distinction because people are going like, man, Roger, you're making so many sense. But once again, if I have multiples of your programs, I have this fear of missing out that's sitting there,
yeah,
So should I be focused on don't take more than two or three positions, or how do I deal with that? And I think you've
yeah,
answered that.
yeah,
You
yeah,
guys give recommendations where you've already taken correlation into consideration.
yeah, yeah. And the pit is its own animal.
Yes,
That's
day
that.
trading, alpha
Yeah,
zone,
that's yeah,
trading
yeah, yeah,
live.
yeah.
Yep.
Yeah, that's its own animal. Yeah, that
I
has no
think I
correlation.
can ask the group, folks, does that answer your question with regard to, positions as it relates across multiple programs? Because I thought you just did a great job of answering it. The answer is yes, Roger. Thank you, buddy.
Okay. All right. All right. Mazel tov. All right. Um. Oh yeah. 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 Okay. So this is a sneaky one. Trading correlated positions without knowing. Okay. Now, folks, I'm going to tell you something right now. I don't blame you for doing this because most people truly have no idea how correlated stocks are in the market. They really don't think they are nearly as much.
Yep.
What Matt just got back, there's two things we're trying to add to the data miner. And I'm not trying to sell you data miner today. But we're trying to add two things to data miner. We're trying to add correlation and seasonality, we are seasonality, correlation and the option data on implied volatility, how often for time spreads and that data. But when we do this and you start seeing how correlated some of your favorite stocks are, your mouth will drop down to the floor. Okay. I don't think this is a problem. This is a problem that people, it's one of those invisible things. It's one of those things that's invisible till you see it. It's like those cameras that show you invisible germs, and you're like, what the
What?
hell? And then you're like, oh my God, I'm never going to eat this again for the next 20 years. It's like that. It's like that. It's eye-opening. It's eye-opening. So just trust me on the fact that whatever correlation you think exists, it's probably 3 times worse. Okay? So when you see how correlated some of the stocks are, you will not believe your eyes. So I think this is one of those things where people actually need to see it to believe it, and that's why I'm trying to work on it to show you. But for now, just trust me. Like a tech stock, don't try to be smart and think a software stock is not related to a chip stock. It's still a tech stock. If you want to avoid that kind of correlation, trade a consumer staple in a tech stock. Trade a real estate stock and a healthcare stock. Like just use common sense. Don't try to outgame the system. Well, it's not that. No. Trust me. They are way more. The average stock has a correlation of 0.66 to another stock.
Wow.
That's 2/3. So just a random large cap stock. So it's a lot worse than you guys think it is. So I think after you have a tool to actually see it, you will not believe how correlated these things are. Okay. Okay. Now this one that I'm going to tell you right now, I would put this one in the top 3. Switching systems or strategies at the first sign of failure. Folks, listen to me good. And this, where this goes? Switching. This goes to this right here. Goes with this: trading individual positions instead of a program. When you purchase a program or you subscribe to a service or you subscribe to a platform like AlphaZone Pro, and I'll talk about AlphaZone Pro in a bit. When you subscribe to something like that, it's not there to time the next trade. It works on statistics. It works on odds. It works on probabilities. It doesn't work on certainties. If you want to get a good idea of how something works, run it through 100 spins. Okay? 200 spins. Then you'll start to see something. You learning something or investing your hard-earned dollar into something and then putting 2 or 3 trades into it and losing money. Unfortunately, and I know it sounds painful because it's your money, but there is absolutely no statistical probability in that. It's just it's a F in the wind. You know what I'm saying? It's nothing. It means nothing. You can't learn anything from it. It's like you looking down the street and seeing 3 white cars pass by, and you all of a sudden saying, that was an omen. I'm going to buy a white car. That sounds retarded, right? You would never do something like that. Okay? That's what you are doing. That's what you're doing. You climb a stairs, and then it's like mentally climbing a stairs, you get your setup, and then you fall down. Don't do that. Stop looking for a quick fix. It does not exist. We don't know what the next trades will give us, or the next 5 or 10 trades will give us. It doesn't. And if you find somebody who thinks they do, and look, I'm the guy that has a 94% win rate, and I'm telling you this. I'm not the guy with the 40% win rate telling you this. I'm the guy with the 94%. I could just tell you, yeah, I know what the next trade is going to be, but I don't. And nobody does. You know why? Because we haven't figured out how to predict the future yet. So everything you do has to be based in the world of probabilities. You got to take everything I say, everything you read, everything you do. It all has to be taken in the world of uncertainties. You have to start getting uncomfortable living in the unknown. Okay? Not switching systems. What you're doing by switching systems is you're trying to get your control back. You guys do understand that, right? You're trying to get control over the uncontrollable. I don't know if you guys were able to put that together, but that's what you're doing. I don't know. I can't see what people are saying, but do people understand that?
They do, Roger. And
Okay,
I think that,
okay.
yeah, I mean, the big time, the thing is this, people need to understand that in particular, let's talk about some of your programs. These are things that have survived the test of time. So if people just think for a minute, a strategy that goes back 5 years, for example, or 10 years, if you think about everything that's occurred in the market over that period of time, there's been a lot of upheaval, there's been a lot of change, there's been a lot of just incredible movements in the markets. And you see how the system has performed. It just tells you that this is a marathon and not a sprint.
Right.
And so, unless it is something that is brand spanking new, with no historical basis,
And that's the worst, because then you
that's the
have no historic.
worst.
That's
Yeah.
that. Yeah, people love new trading systems, but I'm like, that's like the worst thing you can do. Go to the oldest one. That's the one that you want, the one that has the most history, the one that
Yes.
has the most data. You understand? You're paying for the data. That's what you're paying for, the data.
Mhm.
All
Yeah,
right.
we all
So
know that past performance doesn't, guarantee
right.
future results, but you cannot ignore how a strategy or an approach has reacted over time if we think about what happened over that period of time. And we
Right.
tend to forget that. We have amnesia about that.
Yes, which all goes back to trading individual positions instead of the program.
Yes.
So you see how switching strategies at first sign of failure is related directly to this. They're very related to each other. Okay.
Hmm.
Okay. And that's probably one of the biggest mistakes I see people make. And the reason they do that, and you know why you know how they get themselves into this problem and this problem, Raleigh? With this problem right here.
Yes. One leads into the next.
The chain, remember what I said? The chain is only as strong as its weakest
Weakest link.
link. And if you think these are not tied together, oh boy, they're not. Oh God. Okay. Let's
Great
see.
session, and we're doing wonderful on time.
Oh, we're doing great. We're doing great. Okay. Now this again, this goes to experience. This is more this right here, not seeing the big picture. This is more of like trading correlated positions. This is one of those things that most people just don't talk about. I think I mentioned to you guys when I first started this. I'm going to say the story again because it's just a funny story. The first book or the second book I read was William O'Neill's How to Make Money in Stocks, which I still think is one of the best books ever written on trading. But it was like a 200-page book, and there was one or two pages in the middle which you could literally, it was a chapter, and the chapter was like 2 pages, and it was about, oh, by the way, most of the stocks, everything we're talking about, they're all correlated to the sector. So you might as well just look at the sector if the sector's not going your way. So I was like, you probably should have spent a little more time on that. That sounds really important. It's kind of like everything I'm teaching you is kind of dependent on these 2 pages. Well, okay. I'm not kidding. I'm not making this up. It was like a mic. It's like something they put in after the fact in the middle to kind of almost. I almost passed it when I was looking. I'm telling you. I don't know if they've expanded on it. I haven't looked at it in 30 years, literally in 30 years. So, that's what this reminds me of. Trading correlated. You really don't know how correlated are, and most of you don't up till the time you met me. You did not know about the bigger picture. I keep talking about the bigger picture, the bigger picture, the bigger picture. Using multiple time frames. Well, that's really, really important. So this is something that I don't blame you, and this is something that comes with experience. This is something that comes with experience. Switching systems is something you have to realize as a beginner. See, a lot of these mistakes you make later on, and a lot of these mistakes you make early on. So I'm trying to kind of show you all of them together, okay? So again, this is a beginner's mistake right here. This is a beginner's mistake right here. This is an intermediate mistake right here. This is a mistake that I see professionals make all the time. This is a beginner's mistake here. This is a intermediate mistake right here. Now, let's unrealistic expectations. Why did most people get into the markets? What attracted you to the markets? You know what it was? Not having a 9 to 5 job and becoming rich. Tell me it ain't so. Was it staring at charts? Hey guys, I got a cool, sexy thing for you. You're going to stare at charts for 8 hours a day and you're not going to make a penny. Be like, what the hell? Right? What do I want to do that for? Right? I don't want to do it. I don't want to do that. So you got into this. You got into this. Okay. You came into this. You spend your $3,000 on your first program because someone told you that you were not going to have a 9 to 5 job and that you were going to make a lot of money. Otherwise, you wouldn't have done it. And if you say it wasn't for that reason, then you're just lying to yourself. Okay. All right. To me, honestly, I'll tell you what it was. The 9 to 5 had nothing to do with it. I was in love with it. It was the fact that I did not realize till my best friend told me at the time that you can literally make money like Vegas. Like you can just make I was flabbergasted when I heard that. To me, that was like, wow, you could do this and this is legal. That was it. I was hooked. But most people, they want to make more money. They want to have more freedom. Remember, I was a kid. It was different for me. The 9 to 5 I didn't even know what 9 to 5 was at the time. So you came into this, you wanted freedom to do what you want to do, and you want to make a limited amount of money. And that's why you did it. And then all of a sudden, some jerk named Roger comes and tells you all these rules you have to follow, and tells you all how disciplined you have to be, and tells you all these things that you didn't think about. And that's what causes your mind doesn't like it. So you keep switching systems. You keep switching systems till you find one that validates what you had when you first started the idea of what you were going to do. I know, no, and I don't even, trust me, I've done this many, many years. I've only interviewed maybe thousands of people. That is the reason why. You see how it all comes together? How all of this, see how unrealistic expectations comes with switching systems? How one causes another? This is a really important session. All right.
That's critical, Roger. I mean,
Yes.
I will raise my hand. I mean, after, 30 years in the corporate world, and basically still having a lot of energy and wanting to do something, I was like, what? You can make money day trading?
Right.
That's
Of
what opened my
course.
eyes.
Of course.
And then, and it was more about the independence and the time, et cetera. And I think everybody here agrees with that. But
Yes.
we also learned that it's never as easy. That's the expectation. you know.
And again, I'm just trying to show you the reasons people do these things. Of course, I agree. I think everybody's in complete agreement, but I'm trying to get you to start consciously thinking about your actions. This is the purpose of this.
Right.
You know, I want you guys to understand something. You, it may seem to you that I'm doing a lot of things to change you consciously, but I'm doing a lot of things that you're not aware that I'm doing to change you from a subconscious perspective.
Right.
Because that's 80% of what's out there. I want your mind to start thinking, okay? And that's what makes a good teacher, somebody who can make you think for yourself, okay? So this one, next one, favoring one position over another. How many times have you guys, I'm going to put on 10 shares of this stock because it's my favorite stock, but I'm going to put 50 shares of this stock because it's Walmart after all. What can happen? I mean, right? Or you make up, you don't know what's going to, here. Remember? Assume they know something they don't. None of us know what the next big winner is going to be. Anybody who's been doing this for more than, I don't know, 3 months will tell you, absolutely. I thought this was going to be the winner, and I thought this was going to be the winner. The market has an amazing way of proving that Murphy's Law never, ever fails. Okay? So don't balance your positions. Okay, so let me help you with this. I want to help you to do this. There's a lot of different ways to do this, Raleigh. You know, there's a million ways to equalize your positions.
Yep.
And I finally realized that the way I try to get people to do it using ATR, they're just not going to do it. And that's okay. That's okay. So I'm going to give you another way to do it, okay? Put an equal amount of money into every position you do. So if you put $1,000 into it, if you buy $1,000 worth of options, then you buy $1,000 worth of options for all of your positions. This is a hypothetical. I'm not saying you should buy $1,000 of options for your position. Hypothetically, you put, let's say the biggest position you have in an option is $500. You make sure all of your positions are $500. You don't know what the next big one is going to be. Okay. So at least, so I don't want to hear I had a big loser. Your loser should be in proportion to all your other losers. And your winners should be proportioned to all your other. Just put an equal amount of money. I know Richard, I don't know if he still does this. I'm assuming he does. But $2,000 into each position. That's a very normal amount of money.
He just published that to everyone.
Oh,
That hit
well,
2,000
see,
on all positions.
There you go. There you go. There you go. You don't have to use ATR. You don't have to be as nitpicky as me. You just equal amount in every position, okay? All right. And another way of favoring one position over another. And I see you guys doing this all the time in the pit. I'll post a stock. I'll put Tesla or Netflix, and I'll get 20 emojis. And then I'll put Sophie or Irene, and I'll get like 5. You don't know you don't know which one is going to run up. You don't know. Get rid of that favoring bias. Come in every day with the markets are completely crazy. They're completely random. Anything will happen, and we don't know anything for sure. That's how you have to come into this every morning. If you come in, I know exactly what's going to happen. I know exactly what's not going to happen. You are going to get your head handed to you. Okay? Matt actually brought up a very good point. Yes, the guy sitting right here 10 feet away from me. I used to call him in the morning, and I asked him, I'm like, Matt, did you come and watch the VIP room this morning, the morning show? He's like, no, you bias me too much. I said, you know what? Damn, he's right. So I just call him for 5 minutes on the way to work, and I give him the highlights, like what the catalysts are, and like very, very broad. Like so he's in tune, so he kind of understands what I'm looking at. It's like I don't know, 5-10 minute conversation, Matt.
Yeah.
Yeah. And that's it. Are you short, long? Are you doing anything?
No, or nothing.
No.
Yeah, this volume is really low. Although I think we're going to cool off. I think we may go back to the VWAP today. I think we may come back down to here today on the SPY, which would literally be like half a point away with this range we're having. This range is like a car that can barely drive 5 miles per hour. All right. Not having a trading plan. And honestly, I wrote this, Richard, because it's a good rule, only liquidation until 10 a.m., but that's part of having a trading plan. For example, you can have a trading plan that trades at the open. Every trade, I know a lot of income traders that do a lot of selling options on the open. So I don't want to, I'll leave it on here, but I'm just going to say part of number 9. Number 9. Okay. So
Yeah. Trading plan covers a lot.
yeah, yeah. I mean, we don't want to get this. The idea here is not to get into the details. It's to have perspective and to understand that these are the big things that keep you from success.
Right.
Okay, and they're not in any specific order, but again, some of them are more tailored to absolute beginners, and some of them are tailored to folks who've been around the block a few times. Okay, next one. Averaging down positions. Now, folks, listen to me. Listen to me and listen to me good. I don't want to say negative things about another trader who lost over $300,000, and I didn't even know this till Raleigh brought it up. But that was a fascinating, eye-opening story. I've heard a lot of stories like that, but not that one in particular because I happen to know that guy. He's a great guy, and we worked with him before, and but I don't want to get into more of it than that. But you don't lose $300,000 averaging up. Right? You make $300,000 averaging up. You lose $300. Okay, so I want to explain to you guys this. There are 2 types of betting strategies. This is straight from poker. This was not even invented for the stock market. Martingale and anti-martingale.
Yep.
Okay. And they're based on statistics. This is not my theory. This is math. Okay. Don't argue with math if you don't like this. Do you know why Vegas casinos have a max bet at a table? So you can't just triple your bet every time and keep betting. There's a table limit on the bet you can make. That is designed. So you could do this in gambling. Okay. But stocks and commodities, they don't really have a high or a low till 0, right? So martingale strategies do not work. They are guaranteed mathematically to bankrupt you. Okay, I'm going to say this again. They are mathematically designed to bankrupt you. So if you want to gamble, knock yourself out. But if you want to trade, don't do it. It's not because I think it's bad. It's because it's mathematically bad. It's not good. You want to use only anti-martingale strategies, which means you never average down. Don't do that. Think about this. Think about the logic here. You buy a stock at $300, okay? And then you buy it again at $295. If you really wanted it at $295, why not just wait for it to come down to $295 and buy it there? What you're saying is you screwed up the first time and now it's a better deal. Well, if you screwed up, why are you putting good money after bad money? Don't do that. Don't do that. Now, here's the thing. It's elusive. You know why? Because it'll save your ass 7, 8 times out of 10.
Yes.
It'll keep working. It'll keep working, and it'll lull you into a false sense of security. And then it's going to hit you so hard you won't even know, and it'll bankrupt you. I have seen many, 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 many people, including professional traders like Nate Niederhofer, go BK as a result of that. Do not average down. Losers average losers. But Roger, I've seen this other guy do it. I am telling you, you are mathematically going against math. If you want to go against me, that's fine. Never go against math. You know why? Because math will always win. And if you don't believe in math, you shouldn't be trading. Okay? And I'm pretty sure everybody here believes in math.
Right.
Math, science, math, okay? Math. Good old-fashioned math. High school math. Okay?
So I've also heard it said, Roger, that, martingale strategies are just a way of rationalizing a losing position.
Exactly.
And that gets back to the core emotion of not wanting to admit we made a mistake.
Right.
Admitting you're wrong is a hard thing for a lot of people to do.
Right. By the way, have you noticed something interesting? I don't even have cut your losers or write your winners here because you need to first get past this. That's part of your trading plan. That's part of your trading plan. And every trading plan is different. Every trading plan is different. Yeah, I don't know anybody, I've never met a long-term successful trader that averages down in my life. I've met a lot of short-term traders that make a killing doing it, but I've never made anybody long-term doing it.
And you know what? And it's a very, Roger, I can tell you firsthand, it's a very popular technique if you're dealing with a financial advisor.
Oh,
That,
yeah,
because that gets into dollar cost averaging and things of this nature,
sure.
where they want you to hold positions, etc. So it is endemic in the business, as a way to basically take advantage of, a better value position. I'm not smart enough to know if that makes sense on a longer term portfolio,
It,
Roger. You
it,
would be
it,
better at that, but
I think doing it on a longer-term portfolio is not it's and if you're not on margin and if you're I'm okay,
yes,
so
yeah.
again, perspective, let's talk about 10-year period. If you're doing it on 10-year period and you're buying a top 15, 20 stock, that's okay, you could do that. But if you're doing it for 5 years or 2 years, don't. 10 years minimum. 10 years if your goal is 10 years. So to give you an example, for one of my daughters, what I want to start doing for Rachel, what I want to start doing is I want to start putting money every Friday into an institutional fund, and it's a dividend. It's a dividend fund, and it's a very low risk dividend fund. It follows the market, but it has a really good dividend. And I want to just keep buying shares blindly at the end of every quarter. So I'm going to do that for the next 10 years, regardless of where the price goes, up or down. But that's a 10-year investment. I'm going to do that till she's 21 years old.
Mhm.
That's going to be her 21. That's going to be her 21st birthday gift. And I don't care if the market crashes. I don't care if the market goes up. But if you want to think that way, you got to think 10 years. 10 years. And most people here are not thinking 10 years, including myself. This is 10 minutes, 10 days. You guys realize if Matt averaged down in the trading zone, he would have like a 98% accuracy. 98% accuracy, because usually we're off by like this much just by averaging down. But we don't trade that way. We just don't trade that way. All
Right.
right. So I want to show you something that can actually help you become a better trader if you are day trading. Remember what I said, having a trading plan, having systematic rules to follow, having a market structure, actually following something that's already designed to give you the basically you have the game plan. You have you have what you need to take it to the next step. Now, this is a program. It's called Alpha Zone Pro, and in a few minutes I'm going to do a class. Matt, can you usher folks? From
From
the YouTube
YouTube.
channel? Yes,
Yeah.
please. Both of you guys, can you usher them? Send them a link. Get them to come into this room. But I'm going to show you a presentation about this program. But I want to show you how structured it is and how it avoids having all those other things to deal with. So look, remember what I said, assuming you know something you don't. Well, the only thing here you have to know is what you see in front of you right now and this sheet. That's all you need to know. You don't need to know anything else. That's number one. You need to learn to follow these rules and to follow these market internals, okay? It's a complete structure. It has a oscillator. Oh, see, you heard that when this switches, when it goes from when momentum shifts, it makes that tring tring tring, that noise. I love that noise. So if I'm not watching the market, I know there's a shift in momentum. So momentum is shifting down right now, and volt is near downwards. I think the market is going to start cool off a little more here. I think we're going to go
So,
down right to the VWAP.
hey, Raj, just real quickly here, we're going to stop the YouTube feed here before we do a pitch. But the other thing is this, just a reminder, you did promise folks you would talk about your watch list
Yeah,
before
let me do that now.
we,
Thanks for reminding me. I actually
yep.
forgot. So let me give you my watch list.
And then we'll switch off YouTube, folks. For those of you that are on YouTube, please come into the Zoom room if you'd like to see the balance of this presentation.
That's a good idea. Yes. Give me 1 second. I'm just turning on TC 2000. All right. Let me do this. Thanks for reminding me. I completely forgot. I got too engrossed in the discussion, my own discussion. But hey, nobody interrupted me. Raleigh?
No, I was the only one that interrupted you.
And I'm not seeing the chat, but I'll open
No,
the chat during the Q&A, but I'm hoping that folks are liking this format better.
no, you covered everything. Once again, I just like the interaction between the people here, Roger. The room
I
is
love it.
open to everyone, everybody supporting each other. My gosh, Bugs and Richard and Omar stepping up, and a lot of questions being answered, and we're not having to say a word.
Yeah, so this is so we're gonna so yeah, first stock. Let me do my shorts.
Okay.
Starbucks. Yeah, Starbucks, DXCM, Elf. I really like this Elf. If we can break down a little lower, I think it's going to be a great A line. Kava, I like Kava right now. I like GAAL, but I think this one has earnings tomorrow, so be careful. Be careful here. QSR, QSR, and BJ's.
Okay. A bunch of these were on your morning short list as well.
Yeah, yeah. Well, there's hardly any stocks on the short. We beggars
I,
can't be choosy right now. You know what I'm saying? There's just not a lot of shorts. I mean, and I was showing folks this. That's one of the reasons why I'm not going short. Look,
yep.
it's because of this.
Look at that.
There's literally nine stocks on my 90-day low list right now.
Yep.
50-day low. Look at this. 6, 20. I mean, I've got nothing to work with here, which means the market is very bullish right now. Notice both of these stocks are on my list. They're just beggars cannot be choosy, folks. That's all I'm going to say.
True.
Beggars cannot be choosy. Okay, now let me give you my long list. Irene, BE, nice looking stock. Roblox again. Of course, it rallies after we liquidate it. Remember the lawsuit? We liquidated it. Obviously, should have, could have, would have. I would have been a genius by holding it, but I did not. We obviously closed it on Friday because it was. But I like it again now, and it's above the 8-day. My only concern here is it's still very vulnerable because of the lawsuit. There's still lawsuit. So
That's right. Yep.
any news comes out, it's going to obviously impact the price of the stock. So it's got a check mark against it, but I love how it's looking right now. I love STX. I'm waiting for this to cool off a little bit. I may want to partake. I like Sophie. I like Rocket Lab. Look at the VWAP. It's breaking above the VWAP, and it's got good volume. This is a very nice looking stock. I like WDC. This one looks a lot like STX to me. They both look very similar.
Mm-hmm.
And by the way, I called them out last week too, before they rallied like this. And I still like Google. That's my
Fast? How about Fast, Roger? Is that still on your list?
Fast is great, but Fast is having an inside day.
Okay, gotcha.
For a stock to be on my watch list, typically it has to be above or below. If it's a long, it has to be above yesterday's high.
Gotcha.
Otherwise, it's not moving.
Yep.
I define a stock by moving. And by the way, just wanted to ask you guys a question. That's my list. So now I'm going to ask you guys an interesting question. Do you remember me telling you that I thought the stock market was going to cool off in a few minutes?
Yes.
Anybody remember that?
Yep. Look.
Does anybody remember that? Aren't you glad everything is recorded here, Raleigh?
Yeah. No. I mean, you basically took a picture of the SPY and you said, "Look, it's holding its head up despite what the Volt is doing, but there's no energy. There's not much volume. But you wouldn't be surprised if the SPY moved down, moved lower
And hit the what?
and hit the 8-day EMA."
The VWAP.
Oh,
Right
excuse me,
here.
the VWAP. Yep.
The VWAP right here.
And look at it. Yep.
But
I mean,
how long ago did I say it?
you said that, well, actually, at the beginning of today's session, first of all, you said it this morning at
I
8
did.
a.m. Okay.
Yeah,
And then when we opened the VIP room at noon.
that's right. And then I said it. Yeah. And then I said it just a few minutes ago as well when it was coming off. I said I wouldn't be surprised if we came down. Anyway, the point is the VWAP, the not the VWAP, but the market internals never lie.
Yeah.
Which brings me again to what I was trying to talk about, and that's this. So I'm going to do a little class right now for you guys, and I'm going to show you